Welcome back to Pro News Weekly. This week, the markets are weighing up their next move.
The US dollar has recovered, the S&P is consolidating, gold has taken a step back, and Bitcoin is caught between risk and opportunity.
Lots to get through. Let's start with the dollar.
So the dollar sailed through the inflation data with flying colors, and the slowdown in consumer prices gives the Fed room to wait and see. The chances of tightening in September have fallen from 50% to 36%. That said, the futures market still expects a rate hike in 2026 and puts the odds at 71%.
And there's an oil story feeding into this too, isn't there?
There is. A deal to reopen the Strait of Hormuz is looking less and less likely, with Washington and Tehran making excessive demands of each other. At the same time, the US has shifted from military action to an economic blockade of Iran. That's adding to a growing deficit in the oil market and pushing Brent towards $100 a barrel. And that risks speeding up inflation and prompting the Fed to raise rates.
On to equities. Strong earnings, renewed interest in artificial intelligence, and lower odds of Fed rate hikes are keeping the indices close to record highs. The Nasdaq 100 is outperforming the S&P, and the VIX Volatility Index has dropped to its lowest since the start of the year, which suggests there's no fear in the market and greed is thriving.
Though not everyone is convinced, right?
Not at all. Bank of America is advising caution, forecasting that earnings per share could fall by up to 20% by the first quarter of 2027. Here's the historical pattern, going all the way back to 1936. When earnings growth has been strong but then starts to slow sharply, the S&P 500 has returned an average of just 6.7% over the following 12 months. This is about half of the 14% during periods when earnings growth is accelerating.
Let's move on to gold, which couldn't hold above $4,400 an ounce. The stagflation backdrop that traders were expecting just didn't materialize. Job losses are a worrying sign for the US economy. Had inflation been speeding up at the same time, gold could have carried on with its rally.
So what's working against it now?
A few things. Lower odds of Fed rate hikes drove the rally earlier this month, but now a stronger dollar and the return of tariffs are acting as headwinds. According to the Wall Street Journal, 40 companies from the S&P 500 have already received about $9.6 billion. An unexpected fiscal stimulus could give the economy a boost and put a spanner in the works for gold.
Over to Bitcoin, which keeps drifting towards consolidation amid mixed news. The hack of CoinKite cold card crypto wallets cost holders around $130 million. That actually drove up demand for fund products. U.S.-registered specialized exchange-traded funds recorded their best weekly inflow at $850 million. And that's giving the bulls on Bitcoin a boost.
But there's selling pressure on the other side.
There is. Strategy, the leading crypto treasury, sold $108.6 million in tokens over the week. That signals weaker demand and is weighing on Bitcoin. Interestingly, Bitcoin is no longer moving in step with U.S. stocks, with their correlation falling sharply and even turning negative at times. So what's on the calendar next week?
In the week ending the 21st of August, investors will be watching business activity data from the US and the Eurozone, the Australian labor market, and inflation in Japan and Canada. The UK calendar looks especially busy. The pound will react to employment, inflation, retail sales, and the purchasing managers' indices.
In the bigger picture?
The labor market and inflation have let the Fed hold a long pause. In that kind of environment, geopolitics can take center stage. Investors are worried about Iran's economic blockade and rising oil prices.
That's it for this episode. Stay on top of global market moves with Pro News Weekly.
Like, share, and subscribe, and we'll see you next week.